Dan, how much room does the BSP have to take further action for the rest of the year and next? And when can they say that it's actually time to hit the pause button?
Actually, we're seeing that rising inflation is the central bank's priority now. No? So more so when higher prices are now negatively affecting consumption.
Mm-hmm.
So that's actually validated by the second quarter GDP report, where we saw household consumption growth only on essentials, and there were scrimping on non-essentials. So the latest rate hike actually reinforces the BSP's commitment to anchor inflation expectations, while the economy remains robust enough to take it. So, but we do think how much more? Probably another 25 basis points in September before a long pause. At least that's our view.
Okay.
Other counterparts have it at around 4.25 to 4.5. So, with all this ranges, it seems that like the rate cycle is nearing the end.
Okay, for you at least it's going to be 4% by the end of the year. Now,
Yeah.
But like what you said, it's really meant to anchor inflation, but at the same time, that price pressures remain elevated. So question now is, have the policy actions by the BSP done its job? And now that they've raised rates yet again, how soon can we see this tempering price pressures?
Well, despite the 175 basis points hike so far, inflation may remain precariously elevated. We're seeing cost push pressures persevere, mostly from the peso's weakness, while global commodity prices actually begin to subside. So with this backdrop, we expect that 25 basis point hike in September before that likely pause to give way to peak consumption and remittance season in the fourth quarter. The BSP will likely conserve its ammunition as consumption returns to support growth in the meantime. However, as with any policy rate action, that takes around, in the past, it takes around 6 to 8 months for the policy action to actually permeate into the financial system. So we think the past actions and the actions yesterday, that's mostly preemptive to arrest other uncertainties that may come in 2023.
Sir, I'll press you po on the inflation issue.
Okay.
Governor Medalla said, I wouldn't bet my house on what's going to be happening with inflation, but he says there's 50-50% chance it will be above target by the end of the year, but we will be closer to 4%. He even said the mismong inflation target, might be changed. 4 out of 7 months, we've been above inflation target. But you did mention that we do see global commodity prices going down. And he did mention there's going to be a peak, October, November. What indicators are you looking at to say definitively that, inflation is going to be going down? Can you even have a view on what's going to be happening by the end of the year?
Well, the main indicator will be those factors that have been driving prices up. So you have wheat, industrial metals, you have energy prices. If you take a look at the charts now, it's actually back to pre-war levels, and wheat is actually trading below January 1 levels, so it's even lower at the moment. So I guess with all those inflationary factors actually coming into fore and lower at that, probably that's going to not really lower inflation in the near to medium term, but probably make it more stable. It could likely settle near the 5.8% range for 5.8% rate on average for most of the remaining months of the second half. So that's actually good because at least it's not turning runaway. So
and finally, sir, how resilient is the economy to absorb this hawkishness from the Bangko Sentral? The good gov mentioned that he sees firm domestic demand, but like you mentioned, the second quarter GDP was disappointing compared to forecasts. At what level of GDP do we need to actually grow to be absorbing these rate hikes, which are now it's already pre-pandemic levels? It might be going even above that.
Well, the view is that growth in the second semester will be slower than the first half. No? So the first half was 7.8%. Probably in the second half, no, based on the estimates that we have, it could grow by 5.3%. Inflation could be flattish around 5.8%, like I mentioned, on the back of stickiness as inflation slowly moderates. That means, the goodwill, quote unquote, that the economy was able to create in the first half will be able to absorb that. I mean, 7.4% growth in the second quarter, slower than expected. That's still very decent growth, no? Compared with the past 2 years. No? So we saw capital formation go up. We saw government spending go up. Imports are, well, deficit is larger now because imports have been growing faster than exports. Household final consumption was the one that actually dampened the growth rate. No? So it's clear, no, that we have this capacity, the economy has that capacity to absorb it given that decent growth in the second quarter. However, one of the dampeners is because of inflation. No? So that has to be managed, no, for the second half. No? And the view, with the rate hikes already in place, second semester will be slower because inflation will likely remain sticky. But all in all, growth for full year could likely be at 6.5%, which is a very good number. So to answer your question, actually, we have to be growing by 6%.
Okay.
Just to be able to, not only absorb other headwinds, but also to be able to manage as well at that GDP levels.